Hello friends, welcome to Adda. In this video of personal finance, we will see what emergency fund is and why it is necessary. First, coming to its definition, it's like a financial buffer set aside for unexpected expenses like medical emergencies, job loss, or urgent repairs. If you have one of these conditions like medical emergency, job loss, or urgent repairs, then you should be in a position to take out some money from this emergency fund, not uh, no need to borrow the money or no need to break your investments. So emergency fund is must for everyone. This will help you avoid high interest loans or liquidating your long term investments during crisis. This is like first line of your financial defense. Now let's see why it matters. Medical expenses are very high in India, right? See, so we need to avoid a sudden and high healthcare costs. Also, we need to avoid loan apps which prevents unregulated borrowing. Also, many households in India are single income. So, if something happens to that person or if he loses job, then family will be in risk. Also, you will have some lot of mental peace even during emergencies. Now, let's see how much you need to save. At least you should start from 3 to 6 months of essential expenses. See, if your income is 25,000, then at least save 75,000 to 1.5 lakh. If you are like freelancer or you have more dependents, more health risks, then save about 12 months as buffer. It is safe. Now let's see where to keep this emergency fund. You should keep this emergency fund in high interest savings. Here you need to know one thing. Your deposit in bank, in most of the banks which are scheduled commercial banks, DICGC gives 5 lakhs insurance, so it is safer. So you can keep it in high interest savings or sweep in FD. If you don't know about this, please be attentive. Sweep in FD is a type of FD which gives more interest than savings, but still it is much liquid than FD. Means you can withdraw it whenever you have necessity. Then uh, you will not earn FD interest. But if your money is kept above 50,000 or above 1 lakh, then that money will earn FD near to FD interest. So please use this facility if you are in need. Here, coming to liquid mutual funds, here you need to have only portion of emergency fund, not complete, because this here you cannot withdraw as instantly as in savings or sweep in FD. Here T plus one time period is there for redemption. So keep a portion of the emergency fund here. Also you can use post office savings. Here our priority is liquidity first, return second. Now let's see how to build it step by step. Start with 5 to 10,000 every month savings. Even if this is not possible, start even with a few thousand, like 1,000 or 2,000 at least. Use automatic transfers, like if you are doing RD or liquid mutual fund, then you can automate the transfers. Use separate account if you are using bank account. Then don't use the account which you are using for UPay, etc. As this fund need to be kept for emergencies only. Refill when used. In case of emergency, you will use this fund, right? After that issue is sorted, again start rebuilding this fund. Review this fund annually and adjust for inflation. Now let's break common misconceptions. Emergency is not only for medical emergencies. See, if your job is in risk or if you have some other uh, issues, then also you can use emergency fund. This is not only for medical. Also, don't think insurance is enough. Insurance sometimes it may not cover complete medical issue itself. What about your dependents? What about your family? So you need to calculate everything. Investment and emergency fund grows it. Don't think investing emergency fund will grow it, because here our priority is safety and liquidity, not growth. Now let's see more cautions. Don't keep all the emergency fund at home. This will give you theft risk. Also, don't keep completely in digital wallet, because these are not issued by DICGC. Use separate account, means the other account which you don't use for day to day necessities. Have some cash reserve, like 1 or 2 weeks uh, to cover bank holidays and strikes, etc. Start now if you did not still have this fund. Here, emergency fund, our priority is safety first. If any fraud is there, report to 1930. Don't see credit cards as a emergency backup, because these are very high interest credit. Now, key takeaways. This is the first step to financial safety. Save at least 3 to 6 months. If possible, save around 12 months. Keep it liquid and safe. Start small but stay consistent. Your financial security starts with emergency fund. See, caution protects, clarity empowers. Now, uh, please let me know what all doubts or your suggestions you may have in the comment section, so that I can reach to you. Thank you.